You can see that the role of central banks has changed, and they are now predatory when it comes to the private sector, when it comes to ordinary commerce. They are debauching the currencies on instructions from the politicians. Central banks are not independent, and we're going to see this with the Fed particularly in 2024. And so I've just stated, I suspect that the reason that we're having a Powell pivot at the moment is partly because of those political pressures. So this is very important. And what we have had, and I think that the majority of central banks were really set up in the wake of the First World War.
According to the latest data, central banks globally increased their official gold reserves by 42 tons in October, indicating ongoing accumulation of this precious metal. Despite these trends, the governance of central banks is encountering challenges. They have drifted away from the clear objectives of their original mandate, experiencing a structural erosion of their independence. At the same time, they are expected to fulfill social and quasi-political responsibilities without adequate legitimacy and authority. The present political landscape, marked by the rise of authoritarianism and skepticism toward liberal democracies, has placed significant pressure on central bankers. This pressure has led to the potential politicization of appointments and even the removal of central bank officials from their positions. Alasdair Macleod observes a shift in central banks, noting that they have become more influenced by political forces, particularly in their dealings with the private sector and regular commerce. Contemporary central banks, established after World War I and functioning without a gold standard, primarily exist to fund governments that spend beyond their tax revenues. He predicts a significant policy change, especially within the Federal Reserve, in 2024, attributing these alterations partly to political influences. Since World War I, central banking emerged after Europe ditched the gold standard, adopting fiat currencies and relying on central banks. Despite their recent origin, central banks have become complex regulators, shaping the financial system amid the historical evolution of banking and credit. Alasdair strongly believes that the era of fiat currencies will eventually end, which could lead to the downfall of central banks. The dominance of the fiat currency system, prevalent since Richard Nixon severed the gold link from the dollar in 1971, is inherently unstable and susceptible to high inflation. Moreover, the disinflationary trends sustaining it since 1980 are slowly reversing. Consequently, the fiat currency system, based on currency value backed by the issuing government rather than a commodity like gold or silver, might face severe challenges in the forthcoming decade. We will present clips from Alasdair Macleod's interview with Palisades Gold Radio. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Now that we're no longer on a gold standard, the primary duty of a central bank, putting aside the, all the regulatory stuff and all the rest of it, is basically to fund the governments, because the governments are now spending a lot more than they can possibly collect in taxes without being thrown out. So you can see that the role of central banks has changed, and they are now predatory when it comes to the private sector, when it comes to ordinary commerce. They are debauching the currencies on instructions from the politicians. Now, all this stuff about central banks being independent from government is a load of guff. Who appoints Jay Powell? Who appoints the governor of the Bank of England? I mean, the answer is the damn politicians. So central banks are not independent, and we're going to see this with the Fed particularly in 2024. And so I've just stated, I suspect that the reason that we're having a Powell pivot at the moment is partly because of those political pressures. This is very important. And what we have had, and I think that the majority of central banks were really set up in the wake of the First World War, because gold standards were suspended. It continued with America, God bless America. They actually continued with it. But in Europe, basically gold went out of the window entirely. We then had fiat currencies, and we had central banks. And we've been lumbered with central banks ever since. Now, when you think that banking was invented by the Romans, and in this form, it probably started with the invention of double entry bookkeeping, which was late 13th, early 14th century in Italy. So the Italian banks started creating credit out of thin air, as it were. It's a tradition which we've all continued, which is fine. I'm not knocking it. You know, this is something which is free markets. You know, you want to go borrow some money, and let's say I'm a banker and you come up with a good case, then I create it for you. The point is I've got to be able to clear the other side of it. Okay, fine. That's not a problem. So central banks actually in that context are a very recent innovation. And given that they have progressively increased regulation as a means of trying to control what they see as the problems of free markets, which actually are problems they have created themselves, I feel absolutely convinced that the end of the fiat currency era, which I think we're rapidly approaching, will also see, and it should see, the end of central banks, because really they have no role in trying to suppress interest rates, whatever. They don't understand commerce. They don't know what actually drives demand for credit. And a lot of them don't seem to understand the difference between money and credit. So we've got this sort of bizarre system which is ill-informed, trying to do a job which it just cannot do. And the sooner that the central banks were got rid of, the better for all of us. And what do we replace it with? Well, there's only one answer. We've got to go back to free banking. And that does mean, incidentally, doing away with the regulations, doing away with things like licenses even. Why does a bank have to have a license? I mean, the answer basically is that the government will only give you a license as a bank if you support the government and help it finance its debts. No, that's completely wrong. It shouldn't be like that. No, so I'm a great advocate of returning to free banking. And if a bank gets itself into trouble, basically, it's got to sort itself out. It's not something that you and I, who have no interest in that bank whatsoever, should be involved with.
JP Morgan's famous quote, "Gold is money, everything else is credit," dates back to 1912, when most major currencies, including the dollar, were backed by gold. Despite the prevailing narrative, Alasdair highlights that the law still acknowledges gold as a currency. He points to its inclusion on the Federal Reserve's balance sheet at a fixed value of $22.22 per ounce, representing the official price of gold. This legal acknowledgement is further underscored by the inscriptions on currency notes pledging to pay the bearer a specific amount in gold sovereigns, reaffirming gold's status as money. Alasdair emphasizes that a rise in gold prices does not signify an increase in gold's inherent value, but reflects a decline in the worth of currencies like dollars, pounds, or euros. He notes the recent gold price surge, which hasn't been uniform across all currencies. Factors contributing to this surge include decreased bond yields, market expectations of a more lenient monetary policy environment, geopolitical tensions, and weakness in the US dollar. As the dollar loses strength, gold becomes more attractive to investors using other currencies, potentially heightening demand for the precious metal. Let's get back to the interview.
You have to bear in mind that gold is legal money. I mean, the eponymous JP Morgan himself said, gold is money and the rest is credit. Mm-hmm. That was true in 1912 when he made that statement, as it is today. Legally, gold is money and the rest is credit. The problem comes when you detach credit in terms of its value from gold. We've been like that now for 52 years. And the only reason that this detachment has lasted this long is because of the propaganda and the bullying efforts of the American-led financial system to try and dissuade us that gold has anything to do with the financial system anymore. It's a pet rock, they say. Mm-hmm. No, if you delve into the law, you will see the reason, for example, that it's on the balance sheet of the Fed at $22.22 to the ounce is because that is the official price of gold. I mean, if gold was a pet rock, it wouldn't be there, or they would value it at market. But no. So, and this is also why, when it came to the Bretton Woods agreement, Nixon could only suspend it. He could not completely denied or follow it up with legislation saying gold is no longer money. No. And this is why we have, in our currency, we have a statement on our paper notes saying, I promise to pay the bearer the sum of, and it's a £10 note, £10, and that is in gold sovereigns, by the way. That's 10 gold sovereigns, promised from the Bank of England, and it's signed by the chief cashier. Now, that is still on every banknote because it is a legal situation. Gold is money, the rest is credit. And this is why I think it's desperately important for people to realize it's not gold going up. It's their dollars, their pounds, their euros, the yen, whatever it is, going down. And when they go down and there is nothing to stop it going down because of what their government's doing to their currency, then, there's going to be no end of it. And I can't really see any practical way in which the US government in particular can return to the situation. I mean, from every which way. Look at the fact that they've been denying that gold is money in defiance of the legal position. You have the whole of the economic establishment not understanding the difference between money and currency. You have got the geopolitical situation because, the Russians and the Chinese understand that gold is money. They've been accumulating gold for that reason, and they have substantial reserves which are not declared as official reserves on the balance sheet of their central banks. The geopolitics of a dollar price shooting up from the American point of view, are just too horrendous. They're not going to encourage it. They want to discourage it. But they've got a problem. How do they deal with it?
Amid financial shifts, central banks and fiat currencies face uncertainty due to political influences and vulnerabilities. The move from commodity-based standards and fiat currencies and central banking's historical evolution poses significant challenges, hinting at potential instability and inflation risks ahead. How can central banks and fiat currencies navigate instability and vulnerabilities in today's financial landscape? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.